We're talking now with Arthur. Arthur, you're with Allworth's Money Matters.
Oh, how are you doing today? Thank you for taking the call.
Yeah, glad you called.
So if you were fully invested in 30-day treasuries, I've been just keep rolling them, didn't need the income, or in your late 60s, how would you barbell a strategy if you don't need the money going forward, given interest rates are a slam dunk?
So here's the fun. I mean, that's a funny question. I wouldn't do that strategy to begin with. So not to be flippant, but
it's been yielding me more. Actually, the difference between a 30 days 5-3. I've been taking the risk. I heard that's what rich people do, so I'm read that mirroring the rich, and I know I'm supposed to be allocated and all this other stuff, but I lost it all when I was younger. So
Okay.
I'm at the point in life where half my money's in California real estate on the marina, so that's a high risk asset.
Yeah.
So I'm balanced. I'm balancing, yeah.
Okay, and then the rest of the assets are in treasuries?
Yes.
And it's
about
been
$1.6 million in treasuries.
All 30-day treasuries.
Yeah, I've just been rolling 30. 3 months, 30. I've been balancing off and on. But
how long have you been doing this?
Oh, about a year.
Yeah.
And what were you doing before?
I'm sorry?
Where was it before a year ago?
It was in mostly stocks and longer-term CDs. I'm just getting more conservative as I age.
How old are you?
69.
Are you married?
No. I get about $50,000 in Social Security. I waited till, late.
And I assume you have no debt.
No, no debt.
Do you have any debt on any of these rental properties?
No, I don't have any rental properties. I just have one marina property on a private island surrounded by yachts.
Are you living on it?
Yeah, I live in it.
Okay. It's not an investment then. You're actually consuming it.
No, it's not an investment. That's my home, and I don't intend to sell it.
Okay.
Yeah, sounds nice.
In a marina, private island.
Yeah.
Sign me up.
Yeah.
Sounds good. Good for you, Arthur. So, and I apologize for maybe I didn't listen to your question enough, because if you were doing this, so you've been using 30-day treasuries, and your concern is, my guess, that rates are going to be reduced, and now what should you do? Is that your question?
Yeah, rates are going to reduce for sure. So it's how fast. So like I said, each percentage, I looked at this morning, I get about 5.3 on a 30-day and about 4.3, on a 1 year.
Yeah, and the longer you go out, the lower it is, right? Even 10 years.
Yeah, and if you go down to 2 years, you're at like 3.5.
Yeah, it's an inverted yield curve.
But what we don't know is that it could be that 6 months from now, short-term rates are at a percentage or 2 percentage points lower, and long-term rates could be higher. We don't know.
He's asking us, essentially, you're asking us to predict where interest rates are.
We have no idea where they're going to go.
We have,
a conservative. So just as an example, I bought a year ago to learn some 20 years. They were at 4%. With $250,000, and I was down $50,000 in a month. That's
you could have been down much worse than that. That 20-year treasury is long.
So I knee-jerked it, and luckily I got out with a little loss.
Well, yeah, I would consider going the same strategy you're going. What you just said to us is you are completely risk adverse.
At this point, I'm going to die with money unless something really bad happens, so I don't care.
Okay. You're completely risk adverse. I would have argued with you when you were buying that 20-year. Did you sell that 20-year?
Yeah, what had happened is my gut wasn't right. It jumped too much, so I sold out, and then I bought it back later, and between the two of them netted just about $1,000 profit.
Okay, and you waited 30 days before you bought it back, I trust. 31 days.
Yeah.
Okay.
Yeah. It was down. At the worst, it was like $1,000 a day for a month.
And you own a 20-year treasury right now?
No, I dumped it all. All I have is 30 days and less.
Look, if I was risking,
and you're a resident of California.
Yeah.
So the nice thing about treasuries, you don't have to pay California.
No state tax. Exactly. That's another good thing
I have some money on the sidelines right now because I expect a capital gains tax to come due sometime in the next, for me, 36 months. So I've got some assets that I know are going to be sold in the next 36 months. So I've set aside some money for capital gains. I I actually don't even buy treasuries. I just put it in a high yield money market account that's FDIC insured.
You can also buy an ETF, like I don't know who the manufacturer is, but there's one
That
BIL, Bill, and it's
And it
I don't know if
rolls.
it's 30 or 69, and it does it all for you, and it's cost you a few basis points or something, but it's you don't have to think about it.
I would do one of those two things, or the strategy that if you want to be involved in
I
doing
would not buy any long-term treasuries.
I wouldn't go out more.
The swings on them are massive.
Yeah,
No, the swings are massive. Yeah,
that's right.
And
I like the 30-day or the bill, the ETF, or a high yield money market account. They're not forgiving much by putting it in a high yield money market.
Not these days.
Not today.
No, I've done that, and they're not even giving you back the tax that I'd have to pay in California.
That's not true.
But you can do a treasury money market.
That's not true. You can do treasury. So
that only invests in.
Where is your money in a big brokerage firm?
Yeah, it's all in Fidelity.
Okay,
so
you look. They're gonna. They use actually. There's all kinds of lawsuits about this right now. You have a cash sweep program in there that you've elected that. There is a menu that they have at Fidelity that will get you exactly where you want to be with short-term treasuries or a similar product. It might be called something different, but it's backed by short-term treasuries that yields every bit as much and is easier to do. Or just continue on your 30-day thing.
Yeah, I would not.
Okay.
I definitely would not do any long term. So I appreciate the call.